Let's dive into the project analysis of Faber Residence today. By now, you would have already heard about the attractive prices of Faber Residence, and I'm sure you'll agree it's clearly priced to sell from Guaco land. But one thing to note, Guaco's land strength doesn't just lie in their foresight in acquiring land early, especially when 2024 was the year of one of the lowest land bids by developer. Their blueprint of success also lies in their layout planning and execution, and that's what we are going to dive deeper into today. Okay, let's start off with the physical attributes of Faber Residence. Firstly, the number of units. There are only 399 units here. That's a comfortable medium density number, not too crowded, and gives the developer a nice balance between community and privacy. It also comes with a 1-for-1 car park lot ratio, all located on a single basement level and consists of 9 blocks. Next, the land size, a staggering 277,000 square feet. That's a generous size, and dare to say, among all the launches happening in the same time frame, this should be one of the largest. If you look at the side photo, you can already see it's visibly much larger than its immediate neighbor, Waterfront. And data-wise, it's about 100,000 square feet bigger. That means you can expect extensive landscaping and lush greenery, something Guaco Land is known for and takes pride in delivering. Anyway, a side note, it's pronounced as Guaco Land, not Guaco Land. Okay, let's continue. The lease tenure starts from 24 February 2025, just 10 days after Valentine's Day this year. That means the land was acquired, lease started, and the project launched all within the same year. That's impressive speed. The construction method used is advanced precast concrete system, which also means that some walls are hackable, allowing for future customization and flexibility in layout designs. Now, next up is actually the NOVP date, which is 31st December 2030, which is especially important for families since Faber Residence is within 1 kilometer of Nanhua Primary School. That timeline is perfect for parents planning their P1 registration. But the expected TOP is Q1 2029, which is about 3+ years from now. All in all, the fundamentals look strong. A comfortable number of units, a large land size, customizable layouts, and an early lease start. Okay, next up, let's go into the unit mix, because this is where you can really see how much thought Guaco Land has put into designing Faber Residence for real long-term demand. First of all, there are no 1-bedroom units or 2-bed 1-bath units here. That's already a bold and strategic move. Most mass market launches like to include those smaller units to push up the per square foot prices and attract investors. But Guaco Land clearly knows that this location's profile, the buyers are predominantly family-orientated enclave. Okay, you can see, starting right from a 2-bed, 2-bathroom layout tells you this project was never about chasing volume. It's about building homes people actually want to live in long term and that families want to upgrade into. Here's the breakdown of the unit distribution. 20% of the development comprised of 2 bedrooms, 2 bathrooms. These are the entry-level units here. But entry-level doesn't mean compromise. For 2-bed, 2-bath, these units are not just perfect for small families or young couples, they also make a strategic investment choice because they remain highly rentable while being more affordable to enter. Unlike the typical 2-bedders in the older resale projects, you're getting a more modern, efficient layout without wasted space. 3-bedroom units takes up 50% of the whole development. I'm going to split it up for you in 3 categories. The first, the basic, 797 and 818 square feet. This will most likely be the hottest seller because they balance affordability and functionality. Perfect for HDB upgraders or first-time condo buyers who wants the practicability of 3-bedders without overstretching their budget. Next up, second, standard 861 square feet. This comes with a flexi room, which is an underrated feature. It's not just an extra room, it's a space that can evolve your lifestyle. Home office today, study room tomorrow, maybe even a walk-in wardrobe down the road. The third category, plus, 1033 and 1044 square feet. These are like the fully loaded versions. You get an additional study, a household shelter, and an extra bathroom. Features that are rare in today's 3 bedrooms. For many families, this layout hits the sweet spot between space, practicability, and future resale appeal. Next up will be the 4 bedrooms that takes up 25% of the whole development and have split it into 2 main types. First, the basic 119 square feet. This is the most price-sensitive version. Think of it like buying a car with everything you need but none of the unnecessary add-ons. Highly functional and ideal for families upgrading from a 4-room HDB. The second one is actually the standard 1206 to 1270 square feet. This is the premium version with features like a dry kitchen, a walk-in wardrobe in a master, and uniform facing for all bedrooms. These layouts are designed for larger families or even multi-generational living without wasted corners or awkward spaces. Next up is actually the 5 bedrooms unit, which takes up 5% of the whole development and is at 1485 square feet. These are the crown jewels, big, spacious, and 2 ensuite bedrooms. And this is the best part, there's no rental listing for this size anywhere in this area right now. This tells you how rare this configuration is and how much potential upside there is, both for families looking for long-term or for investors targeting scarcity. So what is this summary takeaway for this unit mix? 75% of the units here are mainly made out of 3 and 4 beders. That's no coincidence. That's laser-focused planning aimed at the most stable, most consistent buyer pool, families. Now what does this mean? It fills the price void in the market. Buyers who couldn't afford a 3-bedroom before now can. Developers like Guacoland pioneered this concept with Springleaf Residence, and now they are applying the same winning formula here. It allows them to keep quantum low and affordability high without sacrificing livability. And when you combine that with the fact that Faber Residence is within 1 kilometer of Nanhua Primary, a school that is both SAP and GEP, you have something extremely powerful: permanent demand. Every single year, there will be a new wave of parents competing to secure homes here. That demand creates price support. It creates rental demand. It creates long-term resilience. And remember, because this area is predominantly for homestayer, rental listings are extremely limited. This means by the time this project TOP, rental demand is going to be very strong. And as I always say, the most obvious places are not always where you make the highest return. Being right next to the MRT might feel attractive, but the premium is already going to be factored into the pricing. Faber Residence gives you the rare chance to buy before the premium hits. And that's where the profit potential really lies. So next up, we're going to talk about layout quality, because this is where Guacoland really excels. Even the 2-bedroom units features a 3-meter wide living room, which is extremely rare today. Most are 2.7 to 2.8 meters. The dumbbell layouts reduces corridor wasted and maximize usable space. The 3-bedroom basics offers functional, flexible spaces, including layouts that can even double as co-living options. The 4 bedrooms are efficient, livable with minimal wasted space, and balconies kept within 5 to 7% of the total size. The layouts even give you the option to hack this wall for a limited time period at no cost. The luxurious 5-bedroom 1485 square feet are the true standout. Not only is the internal space generous, but there are 0 rental listings of this size in the area right now. And while 5 bedrooms are usually for homestayers, if you're buying for maximum profit potential, this unit type could be a big winner. And remember this, investing in the most obvious location, like directly next to the MRT, doesn't always yield the highest margin. That's because the developer has already priced that premium in. Faber Residence gives you a chance to buy before that premium is factored in, especially with the upcoming Jurong Region line nearby. The big takeaway here, Guacoland isn't just building units, they are solving problems. They have addressed the affordability gap, maximize space efficiency, and design layouts that evolve with your lifestyle. Whether you are a young family just starting out, or a multi-gen household, or an investor thinking long-term, Faber Residence actually do offers a mix that truly works. Now let's go and take a look in the value and pricing strategy. What it means by pay less, gain more. Let's talk about what I think is one of the strongest points of Faber Residence. Its value proposition. Faber Residence is among the first project in the area with GFA harmonization. And this isn't just a fancy term. It directly translates to a better value for you. Now, because of harmonization, the internal usable space is optimized, and you're not paying for unusable area the way you might be in older projects. Here's a perfect example. In the resale market, a nearby 2 bedrooms, 1 bath unit ranges from like 667 to 721 square feet. But at Faber, you can get a 2 bedrooms, 2 bath unit at 646 square feet and still keep the internal living space same or bigger. You're literally paying for less per square foot while getting more functionality. Now let's talk about the 3 bedders, because this is where the real magic happens. Those 797 to 818 square feet units, they are the perfect upgrade solution for many HDB owners. Here's why. The 3 bedders share the same share value as the 2 bedders given the size. That means you are actually buying a 3-bedroom unit at a 2-bedroom price elsewhere. That's a rare opportunity, and it has 2 huge benefits. Your entry risk is lower. Why? Because your initial quantum is much more affordable. Your exit options are wider because more buyers can afford your unit when you eventually sell. Even the 4 bedders here are priced extremely competitively. In fact, the price range for a 4-bedder here is close to what you'll pay for a 3-bedroom elsewhere, even in the resale market. That means you're getting more space, more functionality, and more long-term value for roughly the same price. And these layouts are efficient, no wasted corridor, no oversized balconies. Even the outdoor space is smartly kept at about 5 to 7% of the total area. So you are truly paying for what's usable and livable. Finally, let's talk about the 5-bedroom units. These are for buyers who either want a multi-generation home or are playing the scarcity game, because there's literally no supply of large 5 bedrooms for rent in this area right now. The first people to buy these units will own the category with zero competition, and that usually means maximum profit potential down the line. The key takeaway here, Faber Residence lets you enter at a safer lower quantum while still positioning you for a future upside. Buying at a lower price point means your downside risk is naturally reduced, and when you decide to exit, you'll appeal to a much broader pool of buyers. It's the perfect example of the principle I always talk about. Pay less, gain more. And that's exactly what Faber Residence offers. Now, let's go into the site plan, facings and connectivity. The planning here is impressive. Most of the units here face the Sungai Ulu Pandan River, or internal pool, courtyards, landed homes or the park. Units near the expressway face the future Old Jurong Line Nature Trail with a 24-meter setback and comes with noise-reducing features like acoustic ceiling and glass panel. The average block spacing is 20 to 29 meters, which is longer than the block height itself, which is 19.35 meters, giving more privacy and airflow. Now I'm going to let you know what I feel are the facilities worth highlighting. The 18-courtyard landscape concept, the sunken multi-purpose court, and the grand drop-off is actually at the basement at block 70. Not only that, all the blocks will have the individual drop-off lobby at each block. Now, vehicle movement is kept entirely at basement, freeing up the land for landscaping and creating a safer environment for family and kids. But one feature I really feel that is very practical is the fully sheltered walkway and the side gates. It's not just a small feature. The sheltered walkway connects to 2 of the blocks in development and leads directly to a super bus stop. From there, you're not just 5 minutes from Clementi MRT, but also connected to West Coast Plaza, NUS, NUH, VivoCity, Tanjong Pagar, Marina Bay Sands, Suntec, 6th Avenue, Potong Pasir, Paya Lebar, SGH, Chinatown, Katong, and more. Whew. That's a lot, and I'm only saying the main points only. There are also 3 side gates, one of which leads directly to the park connector. You can literally roll to the park connector. It's perfect for joggers, cyclists, or even pet owners. And this same path will lead you to the upcoming Jurong Town Hall MRT on the Jurong Region Line, which will be ready even earlier or around the same time as Faber Residence. Now this is the best part. Rental yield and demand here are already strong without MRT. Imagine what happens once it's ready. Now, let's go into price gap, safety net, and why low rise can still win big. Let's dive a little bit deeper more, because beyond layout and planning, one of the more important things when buying property is this, your entry price safety net. Let's talk about the price gap between Faber Residence and the nearby high-rise development. Let's take Park Clementi, our closest neighbour along the main road, and TOP around 2023. Recent 3 bedrooms around 1076 square feet. Transactions average around 2003 to 2006 PSF for the past 6 months. In comparison, Faber Residence is launching at around below 2000 PSF and could be launched all the way up to 2350 to 24. So what are we looking at here? There's a price gap of at least 300 to 600 PSF, and that's significant. Within just a 5 minutes drive, you're looking at around 300 PSF lower than a high-rise neighbor, and that gap gives you entry safety. So here what I mean. Someone who buys Park Clementi at 2006 PSF today probably needs to exit around 29 to 3000 PSF to make a decent profit. But if you enter Faber Residence as an average of 22 PSF, you got a comfortable buffer. Even if you sell at 25 to 26 PSF, you are already aligned with where those resale owners need to exit. That's your leverage. Let's not forget, beyond the price, Faber Residence gives you something high-risers can't. Serenity, peace, a family-centric environment. Park Clementi, for example, is surrounded by highway, filter lanes, constant road noise, dust, and the hassle of traffic. If you ever step into a unit facing the expressway, you'll know exactly what I mean. Faber Residence, on the other hand, offers a quiet, tranquil environment that's rare in Singapore today. Amidst all the new transformation, it's becoming harder and harder to find a project tucked away from the concrete jungle. And that's why there's a natural, enduring demand for places like this. Families are willing to sacrifice a bit of convenience for better livability and a stronger environment to raise their children. Now, let's look into another example of key residence. And for anyone who still thinks low rise can't make money, let's talk about this project. This project has very similar attributes to Faber. When it was launched, it was priced around 16 to 17 PSF. Fast forward today, and transactions are happening at 23 to 24 PSF. A jump of about 600 PSF. Profits easily 550k to 700k per unit. That's strong performance for a low-rise tucked deep inside Clementi, Sunset Way, Enclave. And Key Residence doesn't even have a top-tier school within one click. The nearest Bukit Timah Primary. Faber Residence, however, has Nan Hua Primary right at the doorstep, a massive demand driver that Key never had. This tells us one thing: strong livable factors create strong resale performance, and Faber Residence has them. Now, why Waterfront at Faber can't compete? Now, some might compare Faber Residence to Waterfront at Faber, which is transacting around 1005 to 1006 PSF. But here's the catch. Waterfront is a product of an older era. It was launched from land sold in 2013 and completed in 2018 before many today's URA policy improvements like the minimum average unit size, balcony restrictions, and GFA harmonization were introduced. Because of that, its site plan is densely packed. It has narrow blocks, weaker airflow, and far less communal space. Back then, the minimum average unit size was 70 square meter versus today 85 square meter. So developers squeeze in more units. If it were built today, 210 units might shrink to 160 to 180 units to allow for better circulation and landscaping, which is exactly what Faber Residence is doing. Waterfront's layout also reflects that older era. Bedrooms are often squeezy, relying on loft spaces to compensate. But lofts comes with trade-off: low headroom, poor usability, and a reliance on vertical rather than horizontal space, which reduces livability. Balconies back then also weren't capped at 15% of the total area, so many units have oversized balconies and multiple aircon ledges fitting into usable space. For example, let's take a look at 1281 square feet 4 bedrooms there, which can feel effectively like a 900 square feet of usable space, nearly 30% wasted. And you can calculate the true PSF based on the usable space and renewed lease. Waterfront units today, effectively, the PSF is around 2004, higher than Faber Residence potential entry PSF. Even with all this inefficiency, Waterfront units still make profits of 200 to 400k in profit. So imagine what Faber Residence with modern layouts, GFA optimized spaces, and zero wasted space can do. If the old policies can still produce gains, the new policies will almost certainly perform. So here are my final thoughts on what I think about Faber Residence. When you put everything together, it's clear why I call Faber Residence the dark horse among 2025 launches. Number 1. Affordability, secured at one of the lowest land bid in recent years. Faber enters the market with a pricing advantage that newer GLS sites simply can't match. Second, school zone power. Being within 1 kilometer of Nan Hua Primary means a consistent pool of buyers every single year. That's permanent demand and permanent price support.
Number 3, connectivity. A fully sheltered walkway connects you directly to a super bus stop with routes to major hubs like Clementi MRT, NUS, NUH, VivoCity, and Marina Bay Sands. With the upcoming Jurong Town Hall MRT on the Jurong Region Line, Faber isn't just near air transport, it's truly connected. Number 4, strong rentability. Even without MRT, rental demand here is strong due to the limited supply. Once the Jurong Region Line is operational, that demand is expected to spike. Lastly, future-proof layouts. With 75% of units as 3 bedrooms and 4 bedrooms, GFA harmonized, optimized sizing, and flexible layouts, this is a development designed for real people, families, upgraders, and investors, not just for show.
So this is what I truly feel about Faber Residence. The price affordability is one of the main attractions, and it gives you a very safe entry point. It also represents a renewed opportunity. You're entering at a lower PSF, higher layout efficiency, better livability, and modern URA standard backing the product. And more importantly, you're doing it in a development that's corrected the mistakes of the past. In short, price gap gives you a built-in safety net. Livability and serenity makes it a long-term family favorite. Proven track records shows low-rise projects can also deliver strong profits, and URA improvements means you're paying for usable space and not wasted aircon ledges. I believe Faber Residence isn't just another launch. It's currently a smarter, more strategic way to enter the market. And that's exactly why Faber Residence should be at the top of your list. Now, that's all for me today. Have you found someone to yang ni yet? If not, signing off here, Tanya, yang ni.